What's going on, coin traders and algo fam? Looking at Algorand ALGO on that ticker. I know it has been a little bit since we have covered it, so do want to check in right now what happens with this current setup, especially ahead of the anticipated SEC announcement for the Bitcoin ETF. Obviously, with the big fake out yesterday, we can kind of get a little anticipation of what's actually likely to happen in the markets since we didn't know it was fake for about 15 minutes or so. So anyway, do want to dive into this chart. I want to start out first looking at the daily pattern because we're still in this very much longer term, shaping up to be a type of cup and handle type pattern that we could end up setting up for. So if that is the pattern that ultimately we end up seeing out of Algorand, then essentially for a price target, let's look at the bottom just below 9 cents all the way up to the top of the ball would be that effective mark. And then essentially that is our gap. So we would be looking at an upside target of about 39 cents. Right up to, we'll call it the 40-cent mark. So that is going to be our big bullish upside target move if in fact we do confirm this pattern and see that as the upside mark. So about 110% gain from current prices up to that point. So that is the potential for what we are looking at if in fact we ultimately do see this playing out. Now, initially we were thinking that a lot of the Bitcoin ETF news was going to be a little bit more of that sell the news type event, but especially since we've already had such big retracements already coming out of algo. So from the current trend high down to the low right now, about a 35% pullback. So pretty substantial. And if we actually look at that coming off of the bottom with a Fibonacci retracement, we can see that that dips below the 50% retracement, still finding support on top of that though. So still a very good sign to maintain a longer term uptrend. But we know that right now, especially after breaking the daily structure. So we found a high, pulled back, set our low, ran up, set a new high, and then ultimately couldn't break bullish from this flag pattern and confirm it. So saw that rejection and that false breakout, and then ultimately this huge long flush putting in that new daily lower low. Now, if you were following over on Twitter as well, or X at coin_trades is the handle, make sure to follow over on Twitter. We were talking about these three very big support points, so we knew that likely we would find stoppage at one of those. So that's why it is always so important to know what your support targets are, and then that way you can scale in to make sure orders get filled, and that's where you get the best price potential, especially if you start scaling in small, scale in bigger, and then scale biggest at the bottom, because that's where your lowest risk of downside continuation continues, as well as the biggest impact on lowering your average, which also means the most amount of gains on the retrace on the upside. So that's kind of just some basic strategy for trading math here. We will be doing a video in the upcoming future on trading math, so make sure you do hit the subscribe and like button if you have not done so just yet, so you can stay updated on future trading type videos, not just specifically on technical analysis and chart analysis of all crypto charts. Now, like we mentioned, we already broke the daily structure on this chart. And the other thing that happened is that we actually got a bearish cross and a bearish flip on the 12 and 26 period exponential moving average. So we did ultimately get our bullish flip back here at the end of October. And that is when we confirmed actually a rally on top, sat sideways, confirmed and back tested these exponential moving averages as support, which is always what we do like to and need to see, especially to confirm farther upside. And that's actually where we got our big, nice bullish run. So this is probably one of the first signs that we're looking at a top being in right now, especially after breaking the structure and finding a new daily lower low, and right now combined with a new daily lower high as well. So the point of this means is that it's going to be that much harder to actually see a longer term bounce and rally to hit that 40-cent target. So we actually are going to have to probably sit sideways, have the bull struggle, and actually see the trend change on the shorter time frames first. So let's actually go ahead and flip into the 4-hour now and go ahead and get a better picture for what we're looking at right now. As you can see, exponential moving averages did flip bearish, confirm that point as resistance, and then ever since have been confirming 12-period EMA as resistance until we ultimately broke it. But once again, we're kind of getting stuck up at that zone. So if we can maintain the support point pretty much right at 1826, then that's going to be a very big sign to let us know bottom, high, especially since it was a new higher high on the trend, pulling back, set that higher low, and then we would be looking at needing to top out this short-term trend right at the 20-cent psychological mark. So if we do want to look left right now, you can see that current prices are sitting right within the range that we did consolidate at for a decent chunk of time. So since we entered this pattern, we were actually looking at consolidation until the breakout for about almost 2 weeks here, about 13 days or so. But kind of what we have now compared to what we actually had back then is a complete taper off in volume. So you can just see how minimal the volume has been even on this overall bounce. So despite the fact that we saw a pretty significant bounce coming off this bottom, which was about 16.5 cents, we saw about a 22% rally up to that 20-cent mark. But yet, meanwhile, we didn't really get the volume to actually justify and confirm that being a longer term trend change rather than just an oversold bounce. So that's one setup that we do have to look at right now, which is why we're paying so close attention to these exponential moving average, because right now the likelihood is still getting stuck up in this range and actually seeing farther retrace and downside unless we can actually print that closing candle on top of this 20-cent psychological mark. If that does happen, then also we would need to actually confirm that with some volume on the bottom of the chart here. Otherwise, we would be looking at potential of just setting a daily lower high and then continuing a retrace down in that instance. Now, if we actually turn on technicals for the 4-hour, I want to highlight some of these because the daily, or excuse me, the 4-hour RSI right now got pretty oversold. And if we zoom out, the last time we actually had oversold 4-hour RSI was actually back in the middle of October, right when we had our bottom before having this very nice sustained rally. So we know if this is any indication, then we could ultimately end up holding this 18 to 20 cent zone as support and then ultimately seeing prices rally up from there. So that's another reason why it is so critical to be able to hold this zone from around the 18-cent level. So with that said, we are still relevant on the longer term charts. So on the 4-day right now, and especially zooming out, you can see how this 4-day was actually relevant until we from the point where we found our all-time high and ended out the bull market to when we crossed and actually entered the bear market here. So ever since, we have now flipped back into a bullish signal for these exponential moving averages on this 4-day chart, still looking pretty nice and actually entering this zone for support as well. So especially right now, since the 50-period EMA pretty much correlates to, if we look left and draw a line, correlates to over here, this bottoming point at the start of last year where we actually bottomed around 16 cents and then ran up, but yet got rejected in between the 26 and 50 period EMA. So that's another reason why we could think that this is going to be a very strong zone. Even if we do retrace further, I don't really see prices dipping below 16 cents as a close without seeing at least a substantial bounce, probably up until the lower 2022s to ultimately put in a lower high on the 4-day. So now if we do flip over here into the weekly as well, still holding a very nice shape as well, because after blowing through the 50-period EMA, which we didn't do the whole bear market, now holding support above the 26-period EMA, finding it on the 12-period weekly EMA. And especially if we actually want to talk about weekly volumes as well, we can see that the biggest amount of volume had already come in. So we have had a decrease in selling pressure. Although it was week over week increasing, we know that the selling pressure as a whole has decreased. So with about 4.5 days left on the current weekly bar, we know that we could still be seeing a little bit more volume come in to top out the previous 2 weeks volume, which could, if we do hold this pattern, end up being a good sign for at least weekly consolidation. So that's kind of why even at this point, I'm not really expecting too much action, just because we have had about 3.5 months here of continuous upside across the crypto space. And now we actually do need to go into a little bit longer period of accumulation, which if we do look at Wyckoff would set us up for that very nice phase E breakout, ultimately into the next stage of this crypto cycle. So now I do want to close off talking about some further downside supports below the 16-cent zone. So even if we do have pullbacks below that, then I wouldn't expect any pullbacks to be lower than about 1460 down to about 1291 in the lowest instance. So we do have previous resistance as well as a point of support on this bounce. So we know that 1460 is going to be relevant. And then below that as well, big points of rejection on this way down, and also a big point for this consolidation support. So we know that right around the 1291 or 13-cent level is going to be a very big point as well if we do continue to see pullback. Even if we analyze that with the Fibonacci retracement, you can see that that still would put us pretty much in an acceptable range down to about the 61.8 at 15.13. And at the very low end, I don't really know if I see this too much, but obviously it is Algorand, so anything is possible. 78.6 down to 12.35 cents. So still possible as well, but anyway, nonetheless, that's still a sign that we could continue a longer term bull market. Obviously, the higher we do find support on this Fibonacci, the more likelihood of finding a new trend higher high does become, and the more bullish that this coin would end up being without entering this longer term and poor price performance narrative. But so yeah, that is going to go ahead and wrap up the show for today on Algorand and our analysis before we do get the SEC announcement. Jeez, I can't talk this morning, excuse me. And yeah, anyway, drop your comments, thoughts, notes, predictions, all that stuff down in the comment sections below, or feel free to reach out over on Twitter or X at @coin_trades. Do appreciate all the continued love and support. As always, does mean so much. Stay safe, take care, and I'll catch you back in the next video.